I'm Sumaira Abdi, and with me is my colleague Mangalam Malu. Well, for now, the market doing okay. So a bit of an up move is what we saw some time back. For now, holding about over there, 120 points higher on the Sensex. The Nifty is up about 50 odd points. The MidCap index matching step with the frontliners, and the Nifty Bank, of course, today seeing a bit of a dull day after all the excitement earlier on in the week. But we'll get to talking about all of that in a bit. Before that, hi Mangalam.
Hi Sumaira. So cruise control for the markets as we speak, sitting pretty. We did see a bit of volatility intraday, but as we speak, the Nifty yet again climbing higher. So first up, all the top stories, and then we get cracking on answering your individual stock queries. Market climbs down from early highs. Key indices trade 0.25%, actually right now 0.5% higher, pulled up by the main drags. MidCap index though outperforms marginally.
Hopes of a potential US-China trade deal grow as US President Donald Trump says that the deal could be announced in the next 4 weeks, adds that it would be a fair pact.
Cipla is the top index gainer after receiving an establishment inspection report from the US regulator for its Goa manufacturing facility.
And market veteran Ramdev Agarwal calls the Motown slowdown the worst in recent times, adds that earnings growth is still not at its full potential. UTI's Vetri Subramaniam says earnings expectations for FY20 very high. Well, we'll get to answering your queries on your stocks in just a bit. Before that, here's an exclusive Vodafone Idea's 25,000 crore rupee rights issue opens. Tata and Rima caught up with Balesh Sharma, the CEO, and Akshay Mundra, the CFO of Vodafone Idea.
We are a very new company. We've been, since the time we created the company, interacting with analysts, with journalists, but also certainly with investors, existing and prospective. We met them in November after the quarterly results, so about last month. Great interest. People understand the strengths of the company, the outlook on the market, and very clearly our strategy, and support that. So we have good interest from the investors for sure.
Would you agree, Akshay? I mean, especially because Axiata, there was a buzz that they want to not subscribe.
So let me put it this way, that we met investors both who were existing shareholders and some of them who are not shareholders, but they were us, and we've seen a keen interest from categories of investors, both existing shareholders and new investors. So there's a strong interest, as Balesh was saying, and we met a number of investors in 2 rounds of roadshows. So very, very strong interest.
Balesh, what was the feedback from the shareholders on the pricing at 12.5 rupees per share? Because 14 months ago, in February of 2018, when you raised money, it was at 82.5 rupees. In 2014, it was a price of 134 rupees per share. So shareholders have lost money in the company. So what was the feedback from them on the pricing?
So very clearly, well, we haven't gone asking investors or shareholders' opinion on price per se. However, the price has been calculated to keep it attractive for the shareholders so as to give them an opportunity. As also keeping in mind the industry and the past history of rights issue. Remember, this is the largest rights issue the country has seen.
Yes.
But again, the pricing has been with the amount of equity that we are raising versus the existing capital is again, and therefore the price that we see has to be seen versus the TERP and not versus the market price. Okay. Because the market price anyway gets diluted by whatever discount you do to come to the... And versus TERP, it's a discount of 32%, pretty much in line with the practice on rights issues.
Okay. No, I take your point that, you all have put your might behind it. The promoters are bringing in 2.5 billion, no two ways about it. Now, there is a chance that your stake is going above 75 and you have to therefore take SEBI permission. Has that come?
So firstly, I would not agree that there's a chance that it would go above 75%. But because, as you mentioned earlier, that there was no certainty whether Axiata would participate or not, so I think as a precautionary measure, it was right for us to seek that permission. We had taken that permission from SEBI, and that permission has been received.
Okay. But you're confident that it will not come down to the promoter, the unsubscribed portion?
I'm very confident.
Okay, great. With this fundraising and Balesh, with the Indus fundraising coming through, once the Indus stake sale happens, your debt, which is currently at 1.14 lakh crore, will roughly come down to 84,000 crore rupees. That's still a very high number. What is the roadmap to bringing it down?
Rima, our debt is not very high. Our EBITDA is low.
Okay.
Okay.
For the size of operations that we are running, the debt is pretty much adequate. And remember that 80% of our debt is actually the outstanding to the government for deferred spectrum payment. So the external debt is only about 20%. So debt is okay, and that is not the concern area for anybody. The concern is the EBITDA. We have clear plans to get back on that. Very clearly, we have a positive outlook on the market. It's an under-penetrated market even today. 1.3 billion people, but we got at least about half a billion who haven't got their first SIM cards. So there's an opportunity to grow the category. Then within the billion active SIM cards that we've got, about half don't use data in any way, shape or form. Therefore, we call it a glass half full of a growing glass, because you can grow the category and get more people in. You can grow from within the category and get people to use more data, and then use unlimited data. Now again, very confident of the fact that, with the fact that 46% of the non-users, the 2G users therefore, are sitting with one of my two brands, which means they are my existing customers. So if I have 4G coverage and 4G capacity, therefore customer experience, I keep my customers with me as they go up the data curve, and therefore opportunity to grow the revenues. It's a clear win-win. How are we going to do that? Very clear strategy of saying, first of all, I have this opportunity of two different networks, stitch them together, get the strengths of the two into becoming one. I am very well provided on spectrum, on infrastructure, on physical presence in ground, fiber, whichever way you look at it, distribution networks, people, two strong set of people, two strong networks coming together. The number 2 and number 3 in the market are coming together. The parentage of the Aditya Birla Group and the Vodafone Group. So great set of strengths, great outlook on the market. We need to stitch it up very quickly, and we need to get great partners in, working on each of these. Of course, the last thing is get the funding in, which is why we are here today.
Okay.
So,
and if I may just
clear strategy to grow that.
If I may just add on the question of debt, actually, if you look at, and as you said, it will come down to about 840 billion rupees. That would actually mean that our net debt would actually become less than the DOT debt itself. So really speaking, with this additional funding coming in, theoretically it is wiping off all the external debt that we have. Also, what is important is that if you look at from the capital structure of the company, post these two monetizations, capital and Indus monetization happening, we would actually have a debt equity of about 1:1, which is a very healthy structure. So I think we keep reiterating this, that the problem right now is an EBITDA, which is an industry issue, and not really the size of the debt.
No, taking away from that, I mean, I congratulate you that, you'll have brought the equity to the level of the debt. That's not being disputed. But still, just to drive home the point, at an annualized EBITDA of what, if I go by the third quarter numbers, it will be 4,500 crore. That still makes your debt at 83, 84,000, 13, 14, 15 EBITDA. So how does that get bridged? What will be the interest outgo?
So
per year or per
roughly
quarter?
with the debt of about 114,000 crores, our interest charge on P&L is about 10,000 crores. Most of that interest is included in the DOT installment. So the DOT installment, a large component of that is interest, and the principal payment is actually quite back-ended as far as DOT installments are concerned.
Okay, let me come on the point of improving the EBITDA.
Yeah.
So currently annualized, it's about 4,500 crore rupees. You had guided for a peak OPEX synergies of 8,400 crore. How much of that has already come through and is in the EBITDA that we can see in the, in your P&L, and how much will get added to that 4.5? Plus, once the index becomes zero, your EBITDA again gets hit. So, say by FY21, what do you foresee your EBITDA at?
So I will not be able to give you any EBITDA guidance, but let's talk about it qualitatively. You're right that our annualized EBITDA based on Q3 is in the ballpark of 4,500 to 5,000 crores. Now, if you take, we have given guidance for cost synergies in the past, whatever that figure is. So one is those cost synergies will come. We have reported in our quarterly results that the synergies realized were on an annualized basis close to about. So whatever is the balance synergies, this continue to remain an opportunity and they will be realized.
All right, so that was the commentary.